we need to buy or do we need to sell the stock when we see a big jump, a gap up? Click like, subscribe, and share with your friend if you want to make more money from trading. Welcome to ymchannel. This channel is about trading strategy and money mindset. I want to give you more trading strategy in order you to make more money. If you want more money, click like, subscribe, and share with your friend. So let's start. By the way, I'm not your trading financial advisor. I'm just here for the education purpose. I don't recommend you to buy or sell any stock here. Okay, so I just want to give you some information about this gap up. So you just need one volume indicator. You can tell where is the big jump up. Okay, so basically the green area is a gap up, the red area is a gap down. When we happen a gap, basically the gap serves as a support when the stock is above this. It's like a cushion here. Okay. When the stock is below this green area or red area, it serves as a resistance. Okay. So you will take more time to struggle to come up. So now we combine with this volume indicator. It's a free indicator here. You can see. So what is going on is when the first 3 days after the jump up, if it doesn't come back to this bar, this green bar, it is a strong indicator. You mean maybe go up again. It's possible within 10 days, they will come back to this area to touch this area. Okay. But what is the difference is first, when they jump up, it has the big volume to go up. Okay, like here. The candle on the jump up day is much bigger than the previous day, number one. Number two is when they try to test the buying, the area, basically, this is quite obvious. Let's use this one because it's a big volume here. Okay, they go up, the volume jump up. Draw a line. The second day already, the wick is testing this green area and the volume is low. Remember, the volume has to be low when they touch this area. Let me draw you the zone. Why it has to be low? Because imagine when the organization before the price go up, how do they make money? Is they need to have enough stock in hand. How to get more stock in hand is the individual have to sell the stock. So what happened is they go back and people will start to panic. Oh my God, you go up like this one 14%, maybe people will sell here. So people will try to sell. But who is selling? Individual. Why? Because look at the volume, it's small volume. Every time when they touch this area, it's small volume. So basically it means the big organization did not really quit this stock. Okay, so it's one of the easiest free way to tell if the big capital is still in or not. Okay, so okay, step number one, this volume of the gap up has to be more than before. Okay, step number two, when they go back to this gap area, the volume has to be lower, much lower than the first candle of this gap. Okay, much lower. The best is half of this candle minimum. Okay, so this is quite easy. And second, how to buy, like you buy where. Okay, so this they come back to this purple zone has to finish within 10 days. Okay, so how to buy is first within 10 days it's possible to testing the air. So first, oh my God. Okay, look at here. Get up with high volume, much bigger than before. When they touch this area with a low volume, half of the first candle, when they go up above the first candle is one of our buying points. You see? Is it beautiful? Okay, now look at another one. Here. Go up with big volume. Criteria one, fulfilled. Criteria number two, when they go back to this area, not even touching actually. So with very, very low volume. Okay, so take for number 2, we draw a line here. We buy at this candle and then boom, boom, go all the way up. You see? Okay, so is it easy? Easy, right? So how about this one? Does it fulfill with my strategy? This one. The answer is no. Why? Because the candle is not really a big jump. The candle, the volume is not big jump. So it's not fulfilled with our criteria, but it could still going up. Why I say it doesn't fulfill? Because the volume thing. So today the strategy is to teach you how to find the big profit, okay, with gap. Okay, this is a very easy strategy. And you can combine with another of my indicator. You can use it with a subscription. I'm doing a subscription. You can unsubscribe anytime with this indicator. So when the gap happen, okay, when the price go down with below this blue line, with low volume, when they go above this blue line with a gap up with high volume, we buy. That's it. Okay, how to cut loss? We use the first candle, the lowest price, to cut loss. Okay, to combine with this, you can really tell where to buy easily. You see, all the way up, all the way up. Okay, of course, with this blue line, you can even buy earlier, like here, here, easy, right? So here and here, you need to combine with my the second indicator in the same subscription. So if you buy here, is the red go above this purple, we buy. Okay, the best is over 50%. The red is over 50, it's stronger. Okay, so this one will still go down below this blue line. But the second buying point is here. We buy when they go above this blue line, and the red bar is above 50 and above this purple line. So we buy here basically, okay? So if you want to buy more, you can use other strategy. Let's say today's the gap strategy. You see this gap? You just buy here and then boom, you go up again, okay? It's a very powerful strategy, powerful indicator. So very easy. So I hope you can benefit from this video. And next time when you see a gap up, you don't need to get panic at least, okay? So not all the gap is good. I want to show you is, let's say Tesla. We have two type of gap. So the NVDA, this type, is go above this bar, is a strong gap up, okay? But we also have a declining gap up, like a fake gap up. So I'm going to show you here. If within 10 days, they go back to this gap area, you need to be careful. For example, you can see here. The first one, Tesla is doing very strong. They did not even touch back the zone. But remember, okay, if you look at the volume, it's not really same as what we say. So this is not a big profit. It won't crazily jump up. The one I just mentioned you is crazily jump up. This is just a normal gap without the volume things, but it's still strong because this one jump up and it never come back, okay? But it's not a big jump, like what I say, the one period is a big continuously going up, okay? So look at here. Within 10 days, they go back to this zone, and the volume, look, the volume when they go back is even higher than the gap up candle. So basically, it is not a good sign. I mean, the momentum to go up is going to less and less and less because more people, even maybe some more capital want to sell, more want to sell, okay? So you can see here also, the red bar is going low, but still over 50%, so it's still healthy. The third gap. Look at this. First 3 days go up. I go back to this gap up area. Even go all the way down to this area. So it's not a really strong gap. Okay. And so what happened is it go up just slightly and go boom, go down like this. Okay. And this gap serves as a resistance zone. Okay. So we need to battle with this. The good thing is, look at this line, at least it's not going down. It's going to be flat. So it will take some time for Tesla to come up. And also we need to wait the confirmation when to buy back for swing trader, I mean. So we can buy back when they go back above this blue line or this red line go above this purple line, okay? And so let's see how it goes. Would they go down later or would they go back to this blue zone? So we need to see later, okay? So today is my sharing. Click like, subscribe, and share with your friend and join my indicator. I will also have more strategy for you when you join the indicator, okay? I will join my complete class. I will also have a 1 year free subscription for the indicator for you. And see you in the next video. Bye-bye.